The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You've got half of the Money Masters with you. Tom is out buying real estate on this terrific Tuesday. Thanks so much for joining us. We've got the Dow up 10 points right now. The S&P is up 18, or is down 18 cents. Composite off 8. Small caps up a buck, off a buck 53. You've got Microsoft. We'll go take a look at that Microsoft chart. It is down 88 cents. That's off 3% here this morning. That's off of its session lows. Intel off about 11 pennies, down 0.5%. Google off $2 and change. Cisco down 3 pennies. Apple trading up just slightly, up $1.60 right now. Less than 0.3% out there. Leading things to the upside here in the markets, you've got Priceline. PCLN is a ticker symbol. They're up 0.5%, up $3, $3.50 or so. You've got a bunch of you got Sherwin-Williams having another good day out there. You talk about being bullish in housing. You got Sherwin-Williams. They acquired a company in Mexico yesterday. They're trading up another 3% here this morning, up $4 in change. Home Depot as well, up $3, up 4 6/10% out there. Housing, other than the housing stocks, we'll certainly take a look at some of the housing stocks. I know that a couple of them getting hit yesterday. Beazer Homes was one of them. I believe Lennar held up pretty well. Toll Brothers, I think, got hit. We'll certainly take a look at some of those stocks. What's that all about? Well, that is all about some of just simply the intense selling pressure that you're seeing in the marketplace. And some of that, quite frankly, is driven because of just simple tax decisions. The difference between paying a tax at 15% capital gain versus paying at the highest rate possible out there for some of you listeners. And so some of you, I know, are making those exact same decisions. Tax consequences. Do I pay now? Do I pay higher prices in the future? I had 3 conversations yesterday with clients that were going through just that exact same thought process. So it's being done. That will also put pressure in the markets, especially when you take a look at the high flyers out there. Well, what have been the high flyers in the market? Certainly Apple, certainly IBM, certainly Google, certainly Toll Brothers, certainly Lennar, certainly not Beazer, but Beazer was out some with some earnings there that just simply didn't mesh very well out there. You've got Sherwin-Williams again trading up here, Home Depot, Dick's Sporting Goods out with numbers also before the bell. They're up 4% here. If we take a look at Dick's Sporting Goods numbers here, Dick's was, what did they do? They did revenues here, net sales $1.3 billion. Versus $1.1 billion. That is nice. They had net income 82.2 versus 71.56. Their earnings per share was 40 cents versus 33 cents out there. So we'll certainly take a look at that stock chart. To the downside this morning, nothing really big other than getting crushed as High Crush Partners down $6 and change. No telling where that stock is headed to, trading at $14. I believe right around the $12 area was an expansion of swing points. This was a recent IPO here. Nobody in this equity in a profit position as we speak. Also to the downside, you've got Baidu off $2 and change. ACOM Technologies, ACM, off $2 and change. Market West Energy off $2 and change. 3D Systems, DDD, getting down about 4% here, but we know that has been a strong stock out there. Again, 877-927-6648. Got the Dow up 30 points. It is New Moon Tuesday out here when we should be expecting a trend change. We go take a look at the 30-minute chart here on all of the futures contracts. What we are seeing, first, most notably and most important, was the NASDAQ futures. We know NASDAQ futures was pulling us down in the markets, mostly because of Apple, which is up about $3 here right now. We saw the NASDAQ futures coming and attacking this little hammer candle. We're looking at a 30-minute chart here. We'll go to the daily charts in a moment. The 30-minute chart shows the 8:30 session here on November the 9th. The low there was is 25. 56 and a quarter. That level was tested this morning as we came into the 9:30 to 10 session. Rejected that area. Did it with a bullish engulfing candle. A rather nice one, I might add. We're getting some additional confirmation here on the NQ. That was after making a 1 to 1.272. Smaller A to B equals CD. The larger one that is still out there would have taken or will take the NQ down to the 25-28 level. We take a look at the retracement that the NQ here is done just simply off of its a smaller A to B equals CD. We can see we're coming into the 0.618 level with wide-ranging bars out there. That takes you to 2580. Its next stop is before it pulls back, probably in the 2587 level, the 0.786 area of an A to just simply retracement, quite frankly, off that C to D leg. The real retracement that you ought to be paying attention to would really be off of the smaller A to B equals CD. That would come from the session at 1 p.m. on November the 9th, out at the high of 2607, down to the lows that came in at 10 o'clock this morning. And so really so I think we probably had two areas converging, 2586 or so. So it looks like the turn date, the lunar cycle, looks to be working here right now as we speak. And we're looking at a 30-minute chart. Might be the next pullback that you would like to maybe consider getting in on. If we go take a look at the daily charts, let's go over to the daily charts of the futures, see what kind of candles, what kind of patterns it is that we have out here. Let's start with the ES Mini. On the ES Mini, we simply have a 1-to-1 A to B equals CD that completed. We saw the completion of that on Friday as the ES Mini got down to a price point of $1363.50. We can see that the actual number was $1365. So that is a beautiful thing out there. You did see yesterday, you actually had a bullish engulfing candle yesterday. So you got confirmation of that pattern, even though that C to D leg here, that looks awful strong here on the way down. But you are getting you're getting that new moon bounce. Where could that new moon bounce take you to? Well, if we take a look at possible spots, let's just simply do the same thing we did on the smaller chart. Let's actually get rid of some of these patterns out here, and now let's draw them in. We could take a look at the retracement of an A to the D point. So your A to D, and on the ES Mini, what you would be looking at, we'll go back to the S&P 500. We'll actually do the S&P Cash Index here next. We take a look at October 18th. The high was 1459.75. That was your A point. Your D point right now happens to be the low that came in on Thursday out at 1363.50. A 0.382, a dead cat bounce, takes you to 1400.27. You close today, quite frankly, at the session highs. Maybe it's just simply around 1380-ish right now. You get a close there. What you'd have is you'd have a doji candle on the 1-to-1 A to B equals CD, a bullish engulfing here yesterday on a light volume day, and you could get one of Stevie's hammer candles. What would that be telling you about the marketplace? Would that be maybe a change in trend? It would be an easy trade, that's for sure, if you get a hammer today. You don't need a hammer today, but boy, that would be a nice trade out there. 1400.27, 1400.25 really, would be the nothing more than a dead cat bounce on the ES Mini out there. But more likely, you'd be looking at the 1422 level, Suite 618. And that looks like that's where the ES Mini wants to go ahead and trade to. Let's go take a look at the other daily charts out here. Let's go take a look at the Dow futures contracts. Then we'll go switch over actually to the indexes as well. As we take a look at this here, the Dow making on the futures, making a 1-to-1 A to B equals C. You're very close to it on Friday last week, getting down to 12,670. The exact number was 12,647 out here. Yesterday you had a bullish engulfing candle. Not a lot of conviction behind that bullish engulfing candle, but you are getting some follow-through and conviction today. You can see on the daily charts here where things were down into this oversold territory. Hadn't been that oversold since June 4th, where we made a pretty significant bottom out there. I do not expect us to make a significant bottom, but we are most certainly, looks like, making a new moon bottom out here today in the marketplace. Let's go switch over to the actual indexes themselves, see what we have going on. So we've got the S&P 500 out here. If we take a look at where this could travel to, we'll show the A to B equals CD pattern for you. We'll show the smaller one. That is the coming off the October 18th high on the S&P cash. That was 1464.02. down to the level of the B point, which was October 26th. Makes a bounce. Looks like the act makes a bounce 4 or 5 trading sessions later into November 2nd out at 1434.27. You'll see here, and I'll get rid of some of these things that are on this chart here because we can always draw them back in. Let's just go ahead and clean it up. We'll get rid of the exponential line out there. We'll get rid of those Fibonacci levels. We'll leave the formation tool. There we go. We cleaned it up just a little bit. Now, what the S&P is going to struggle with here is it's going to test. So it's normal when you break a trend line. And folks, this is a long-term trend line. A relatively long-term trend line. I'm going back to a year ago off of the October lows, the October 4th low specifically. When you break a trend line of that magnitude, what is very likely is your very first test is going to be, in this case here, the S&P trying to break back up into it. So you can draw this trend line on your system. I know that all charting packages out there give you the tools to be able to draw lines. So that is one of those lines that you'll want to draw because it's going to be different than taking a look at the retracement levels. Again, if we take a look at retracement levels, we're going to go from our A point down to our D point. That happens to be this morning's low. This morning's low so far on the S&P came in at 1371.39. You'll see the 0.382 level up above that first area of resistance, which is going to be trying to get back inside that trend. And if it does, could mean a false break to the downside. If all it does is go back up and test that, folks, then that's really setting up your next move to the downside. So your first area of battle, no matter what candles were formed here, which is important because it tells you whether or not a market is going to bounce. The bulls and bears are always giving you signs out there. You don't have to listen to the news. You just need to understand the candle patterns that are out there and just have enough patience to let them go ahead and form. If you're looking at a daily chart and those are the type of decisions that you make, then you need to be patient and just wait for the daily candle to complete out there. If you trade intraday and you're looking for other signals, then you just simply pay attention to that chart pattern that you go ahead and trade out here. So we got a lot of time left in the trading session. The market has only been open for 45 minutes out here, but it looks like the S&P wants to at least do that dead cat bounce. That's the 1406 level, but it's going to have to get through that rising trend line that it broke down through, and it did that with some conviction on November the 8th out there. Let's go take a look at the other cash indexes here before we end up going to break. Let's go take a look at the New York Stock Exchange. We can't leave the New York Stock Exchange all by its lonesome out here. Why? Because this thing, folks, has been the strongest equity, well, the strongest index out here. You say, Steve, why do you say that? Well, if you just simply take a look at the retracement from the swing point off of June 4th low up to the swing point high that was put in on September the 14th, the New York Stock Exchange, the larger breadth of the marketplace, has only done a 0.382 retracement. What does that say? That tells the big dogs that have been losing, people are selling those things to make sure they pay less taxes today versus, let's see, it's November, 60 days from now. It's as simple as that. 877-927-6648. Give us a call, folks. Love to hear from you. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters Show. Steve Rhodes here. Your Dow is up 29 points right now. S&P's up 2. Composite down 7. Small caps, Russell 2000 up 98 cents right now. We're going to go take a look at Microsoft. Then we're going to go take a look at setting up a couple of trades here. We'll take a look at some new moon possible trades out here if you're interested in playing a bounce in the marketplace. We've had a nice little move up on the 30-minute charts out here. We may be seeing a rejection of price, so we'll go take a look at that. You can wait for it to pull back. We will see a little bit of a pullback here intraday. So let's go take a look first at Microsoft, down 3% here this morning. Let's go see what type of volume is behind the move. Microsoft, the individual responsible for Windows 7 and 8, leaving the company. I don't know what the details are behind it, but you've got Microsoft gapping down pretty large out here. Pretty difficult for a stock like this to actually do this. Let's take a look, and it's got volume in it. So let's go ahead and let's take a look at Microsoft, which had been a pretty strong stock. So here's another big name here that is taking out a B point with volume. The most recent B point or swing point would be October 23rd. The low there is 27.76. 64 million shares. That's from October the 23rd. And what it has done so far today, 48 million shares. 48 million shares haven't even been trading for a full hour. So it is taking out a swing point big time with some volume out here. Now, there's a number of A to B equals CD patterns. So we can go take a look at the initial larger one that was set up here with a move off of the high from April 20th. That level, 32.89. That's April the 20th. Your B point on here is going to be the low from June 4th, 2012. That's going to be $28.32, 47 million shares. So our C point is this Microsoft retraces all the way back into the September 24th level, 31.07. So a 1-to-1 A to B equals CD. That's what it has completed thus far this morning as it gaps down. Now, where is it also running into or coming to with regard to areas of possible support? Well, you've got this little open gap out here as we take a look on the left side of the chart. Goes back to January 3rd. So that certainly is going to be one targeted area. But if you take a look at volume there, 64 million. And as I say today, already done 50 million shares. So it has not gotten into that level, but I apologize, it has. It's gotten into the top of that candle so far, which has rejected it, which is January 3rd out there. A more bullish sign, quite frankly, would be at least to test the bottom of the candle here from January 3rd. The low there would be 26.39. That is a gap, a window. It has not been tested. You need to see that tested in order for it to be truly bullish as a support level. It's certainly bullish when you take a look at it from a chart pattern standpoint, but it has a untested window out there. So your larger 1-to-1 here completing this morning. If we take a look at a smaller A to B equals CD, that's smaller A to B, because you can have A to B equals CD patterns within A to B equals CD patterns. Hopefully that makes sense to you. We will be taking a look at the September 21st high, 31.61 out there. Your B point being October 23rd, 27.76 is the low there. We see the C point on this would be November the 6th. Let's go take a look at the retracement level on both of those as long as we're looking at a retracement ruler. Let's see what that level was. 0.618. You got to love it. So the 0.618 is $30.14. Microsoft actually bounced up to a level of 30.20. Why do I say that's beautiful? A great article in the that Bloomberg put together yesterday. I caught it last night, went ahead and smiled and laughed, forwarded it off to Larry, thought he would get a good laugh on it. It's actually a story here about Tom DeMark. Maybe some of you out there may be familiar with Tom DeMark and some of his market calls and some of his chart patterns out there. And he uses a different wave count system. He actually charges $500 a month for the subscription to that if you have the Bloomberg service. I think there's maybe one other service that he provides those chart patterns. I happen to have it on my service out here, so I'm not going to explain to you how that works, but I do have it on my system. But more importantly, he uses Fibonacci as well. Interestingly, included in the article was a quote from Warren Buffett, and Mr. Buffett does not, he believes it's a dubious notion that a stock or index direction can be predicted merely by studying historical price data. When he was referring to there, he was referring to A to B equals CD patterns or Fibonacci expansion, and this was a 2005 statement that he says he still sticks by his words. Of course, he says, this is a specific quote, "I realized that technical analysis didn't work when I turned the chart upside down and didn't get a different answer." Mr. Buffett, come on, TFNN. We'll show you all about patterns that are out there. We'll tell you about Suite 618. That number gets hit more often than anything in the world. 877-927-6648. Dow's up 18 points right now. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow up 18 points right now. The S&P is up about a buck here, and we're going to go around the world. Then we're going to go take a look at setting up a couple of trades here. We'll take a look at them. You know, don't often do this, but it is the new moon out here, and so there is a very good possibility of a change in trend in the marketplace. And one of the places we're going to go take a look at for clues, we're going to go over to Germany. Why? Because the DAX over in Germany has been one of the, we were talking about the New York Stock Exchange being the strongest overall index in the U.S., and we take a look in Germany, the DAX really one of the strongest indexes out there in the world right now. That has been traveling in this sideways consolidation mode ever since the Super Mario Day here, September the 6th. You can see here that the DAX has tried to break through that support area. It tried it on October the 21st. It was first. I'll try that again. October 24th. It tried that. It rejected that area. Moved up to the top side of the horizontal trading range. Got up to a high on the November 7th. Went ahead and sold off. That was quite a sell-off, quite a candle, considering it got up to 74.34 out there. Wide price spread got down to 72.26. Nonetheless, it did try to bust it up. It couldn't do it. Now what was it trying to do? Was trying to bust it down. Was trying to do that yesterday. That area was rejected. Again, this morning they tried busting it down. It has been rejected. It's down 10 points right now. Was down quite a bit more, about 80 points, I believe, as we came on the air this morning on the 9 o'clock show. Up at the top of its range, 71.42 out there is the it's traded at 71.42 right now. That is in essence, the high, which is 71.51. So you've got the DAX here rejecting price as well. We know on the ES Mini, we were taking a look at 30-minute chart here. Now that happened to be this happens to be Tom's not Tom O'Brien, Tom DeMarc's system out here. Now this has not given you a reversal signal for sure, but it is a way of counting patterns. So like I say, I don't have to pay $500 a month. I actually have it programmed into my system here, his system counting. And if we do take a look at the NASDAQ futures here, because we know that has been a weak link in our system. We know the NASDAQ futures on a 30-minute chart was testing that hammer candle. That has held. You had some nice volume there, so it's got a high volume bar at that 9:30 to 10 o'clock session. 54,000 contracts was going against 23,000 contracts out there from November the 9th. Was that 23? 8,000 contracts. I apologize. That little hammer candle, of course, at 8. Now, what you are seeing is a NASDAQ here, on the 30-minute chart. It's not at all overbought just yet, so it has room to run higher. It will pull back. It was trying to pull back. It did have the other futures contracts, the 30-minute contracts. They were the ones that were asking for a little bit of a pullback. That was the Dow, because the Dow here and the S&P, the ES Mini, moving into a little bit of a bought condition, so we may see a pullback. But let's now go over to the ETF structure, so this is a little bit easier for everybody. We're going to now go over and take a look at the SPY. So if we look at the SPY, see what the SPY was doing here. The SPY coming down into a swing point and a gap up. So that area has held. It's been tested now for 2 days in a row. So that's showing you an area of strength out here. That gap up from August 2nd. That candle has 199 million shares. As was actually being tested here on Friday, was tested with 200 million shares. Of course, yesterday, light volume, only 97 million shares out there. But you can see that little red line, that horizontal line going across the screen. That area has held. 36 million shares thus far today. Only an hour and 8 minutes of trading. So that sets up about 180 million if the same type of volume continues for the rest of the trading period out here. However, what we also have is, I'm going to go ahead and get rid of this line, so I'm just going to make it easier so we can take a look at chart patterns. So that's one area where you can see the bulls and the bears, and right now the bulls have won that pattern out there. That is a support area. Now if we take a look at A to B equals CD down, what we're going to see here is what the SPY here completed was a 1 to 1.618, A to B equals CD. That was the price projection of 137.56. What did the S&P get down to, or the SPY get down to this morning? 137.36. What did it get down to on Friday? 137.55 out there. Today, the SPY, if you get a close above yesterday's open, that would be 138.59. You'd have a nice bullish engulfing candle there. You'd want to see some follow-through. So, market has come into a area of support that had been tested that's held. You've done a 1 to 1.618. You have to be concerned about the strength of the move on that C to D leg, because it still says it's got some energy there, but the bulls are doing everything they can to fight it. Now, on the SPYs, and some of you might trade doubles or triples, so you can go figure out your calculation off of those ETFs. We're going to go ahead and give you the 1-to-1 off of the SPY. If we take a look at just simply what a normal retracement would be, it would be your A to your D point. That's going to be this morning's low. We'll go ahead and put that in black out here. So 141.47 would be really nothing more than a dead cat bounce, but that would not be your target if you were going to go ahead and take this as a long trade. More likely, what you would be shooting for is that 144 even Steven. So 144 even Steven is trading out right now at the 138.55 mark. I'm going to go ahead and write that down on a pad of paper. And now what we're going to do is we're going to pull up the position size calculator. And folks, if you have not tried the position size calculator, go over to the homepage at tfnn.com. I'll show you where it is. We've got the, I thought I was going to show you where it is. We'll do that here in a moment. I'll show you where it is. We're coming to the homepage. Over on the left-hand side of the chart, you're going to see a little up arrow and down arrow. Just click until you get down to the power of position sizing. You can try this tool out for free, 30 days. There's a video, shows you how to actually go ahead and use it. Now we're going to actually go to the position size tool, and what we're going to do is we're going to to go ahead and try to set up we are going to set up a trade for these SPYs. So we're going to type in our symbol, SPY. You type it in, you hit the old search button there. Spider S&P 500 comes up. This is a index ETF. It gives you 3 choices that you have to choose: index ETF, stock, or sub-index. Sub-index would be a sector of the S&P. For example, if you were going to go ahead and play the energy sector, the financial sector, and so forth. In this case here, it's an index ETF. We're going to go long, which we're going to choose bull long. Now, what you would do is you'd put in your trading capital. I make this easy for everybody. I just simply use it in increments of $10,000. That way, when I tell you how many shares, or when the system it produces how many shares you should buy, makes it pretty easy. You can put in your free working capital. That does not include everything you have invested in the market. It is your free standing idle cash out there. So we'll do this in increments of $10,000. Our entry point, let's assume it was right here, about right now, 138.55. I'm not recommending that you take the trade. I am showing you how to go ahead and set up the trade out here for a new moon bounce if you are interested in playing that. We would put in our target, $144, even Steven. I like the sound of even Steven out there. Now what this does, it comes back and says, hey, you're allocating more than 40% of your portfolio to this trade. That's why we were choosing whether it was a index ETF or a sector index and so forth. Let's go back up to the top here. This tells us that you would only have a 2-to-1 reward to risk on that. That is because we were using a wider stop, a 1.618 stop. I don't think that you need to use that here on this trade today. What you could do is you'd come back in. 1.272 would more likely be your stop out here. You don't need to risk 1%. I didn't tell you about that. This tells you how much of a risk you want to take as far as your percentage of capital. I would say all you need is maybe about 0.5% risk. Why don't you just dip your toe into the water on this bounce? We'll come back. We'll put 0.5 in there. So a 0.5% risk. That means on $10,000, you're risking $50 in the trade. We've gone ahead and we've given a little bit narrower range. You can see 30% of your requires 30% of your portfolio, though. This gives you about a 2.5-to-1 reward to risk ratio. This gives you everything that you need on the SPYs. This says you would purchase about 25 shares per $10,000 out there. That is how you would set up a trade, folks, in my opinion. Let's go to Kathy in Cambridge, Massachusetts. Kathy, thanks for calling. Thanks for holding. How are you today?
Good. How you doing?
I'm doing great. So you want to take a look at Harmony Gold. Are you in the equity or?
Well, I was looking for an entry.
Looking for an entry. So let's go
either in Harmony or FCX, one of those two. They seem to be kind of. Yeah. I mean, all the gold stocks, I think, the precious metals are kind of trading the same way. But well,
I sure like Harmony. You know, right now you've got the U.S. dollar rand situation. They had one heck of a nice move on November the 7th here. Moves up to a price of $8.80. Does it with 5.3 million shares. You know, yesterday it was testing the area where it broke out. It did it on 1.8 million shares. Let's see, you had a low of 8.30. Yesterday's close was 8.28, 2 pennies. So that told you, okay, be patient. And, you know, you could go ahead and you could take a trade on Harmony, maybe about right here. What would be your target, you know, as you've looked at the charts, what would be your target that you're looking at?
For an entry?
No, your target exit. Where do you think Harmony would trade to? Have you looked at the chart to say, okay, here's where I would actually exit a trade on Harmony?
Probably at that high, 8.80.
8.80. Okay. So, you know, that would... Yeah, I would say that would be one place I would think you could easily, Harmony could easily get into that 905 area where it would run into perhaps some resistance at 13 million shares from September 21st out there, just simply as a trade. You know, you're coming into this area where it moved up from on November 6th. That had 2.2 million shares. It's done 680,000 shares, coming in maybe a little hot. You know, your best entry on this is going to be 782, but you could scale into this thing and take half of your position perhaps right now, and your stop would be underneath the 777 level.
Okay.
And the Harmony, it looks pretty good to me. Let's, you know, it's on my list of stocks that I'm actually watching as well here. Let me put this on just simply an intraday chart. Let's put this on a 10-minute chart since it's not a substantial amount of volume here. So let's see here. What is this doing? As it comes back just simply on the 10-minute chart, that gap up had 185,000 shares. 185,000 shares. That goes into the close of November 6th. As you've come down into it, 95. So it doesn't even have the volume as it's pushing its way down here right now. Looks to me like this is really not a bad place to pull the trigger on it.
Okay.
Okay. What was the other one you were looking at? Let's go take a look at that stock chart.
FCX, Freeport McMahon.
Freeport.
I was waiting for. I was hoping for it to fill the gap from the gap up from, what was it, the 6th to the 7th.
I'm all on board on that one. So the only thing I think this is really a nice horizontal trading range. And I'm with you. I'd like to see it test that September 7th low, 37.41. It hasn't been tested. It's got nice volume. It has nice volume up at the high out there, which is nice on September 14th. There was a little bit of an island reversal candle. The area. So this is a trading range for sure. And I think your exit on this is going to be in the 42.50 to 43.60 type range out there. But I think the ideal entry on this equity is really a test if both, because you and I are fishing for this one. So if and it's been on my list here for a while. So I'm looking for an entry right at 37.41. Now, as the equity moves back down to that area is when we'll make a trading decision. But on FCX, I think you have to wait for that area to get tested. On Harmony, I think you're pretty good to go right about now.
I think Freeport's also coming into it. I think it's 100 and it's 200. Simple SMA.
Oh, is it? Okay. Okay.
Yeah, 36.84 I think it's 200 or 36.90. So that's just about where we're looking to try to pick it up anyway. So. Yeah.
No, they both look like good trades to me, quite frankly. And they're both they're not just on my radar. They're on my Stevie sheet of trades out there. They are. I think they're both. I think they're both great looking. They're both great looking stock chart patterns out there.
Okay, cool beans.
All right.
I'll put my buys in. Thanks a lot, Steve.
You bet. Thanks for listening. Have a great day.
All right. You too.
All right. So we were taking a look at a trade on the SPYs earlier. Let's go take a look at a trade here on the. We'll take a look at a trade here. What else do we want to look at? Well, let's take a look at a possible trade setup on the Qs. Now, you don't want to trade that until Apple gives us some type of reversal signal, which it has not done just yet, at least in my opinion. You'd want to be taking a look at a reversal signal on Apple. Now, you could be taking a look at it on an intraday chart, which we may have seen. And if we do take a look at Apple here, so we've got the 30-minute chart, and then we'll go back to the Qs, then we can take a look at the same thing on the diamond. So we'll give you a little bit of trade setup, a new moon trade setup on a little bit of everything. Now, on Apple, on the 30-minute chart, if you go into the close from yesterday, the 8th. So you go into the close from, was that Friday? Yeah. No, that wasn't. That was Thursday. So you have a low down there of 8.4 million shares going into the close. That area was tested and rejected 12 noon yesterday. It was also tested and rejected with lighter volume, slightly lighter volume, 6.4 million shares going against 8.4 million shares. So it's almost giving you an indication in Apple that it just doesn't have enough strength to keep pushing it down out here. But you'd like to see a little bit more of a bullish sign on Apple. If we go take a look at the daily chart out here, what would that bullish sign be on Apple? Well, it would be pretty simple. It would be Apple closing above yesterday's open, which is 554.15 out there. So when we come back from break, we'll go take a look at the Qs, possible trade set up there. We'll go take a look at the diamonds as well. 877-927-6648. MasterCard jumping out in front right now. Ahead of Priceline. MasterCard up $4 and change. Priceline up $3. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get
get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We've got the Dow up 51 points right now. S&P's up 4. Let's go straight over to the Dow Diamonds, since that is the strength right here in the marketplace right now. The diamonds here forming in a bullish engulfing candle. Looks rather nice out here at the moment. We also have the diamonds coming into the swing point from August the 2nd out there. That swing point has 11 million shares. As the diamonds, they tested it on Friday with 6.5 million shares. Tested again this morning and rejected that area. So far, 1.7 million shares in the Dow Diamonds. If we take a look at A to B equals CD patterns here, really you'd take a look at coming off of the swing point from October 5th. That would be your A point, your B point October 12th. Does a pretty decent retracement. It makes a little bit over 1 to 2. A to B equals CD. As we take a look at the possible price projections here on a bounce, number one, if you just simply go from the swing point high to the low out there, you would see certainly you've got your dead cat bounce that you've got to deal with, 130.83. Why do I say you got to deal with it? Well, What you've got to really deal with on the diamonds happens to be that wide-ranging volume bar day on November the 7th. So the low of that is 128.65. You're inside it right now. That has 18 million shares. No way so far today you're going to get 18 million shares out of this unless volume really picks up, which is a possibility. But you're inside that. That is a good sign out here. You're trading up at the session high at the moment. So what that says to me is you would be looking at about 132.97. That's nothing more than the sweet 618 area. That would be the first real target on a trade here. It's at 128.75 right now. I do believe what we will see is a little bit of a pullback here, at least when I take a look at the futures contract, and it's getting towards that little overbought area. So you would want to consider taking a trade on this on a pullback. So we've got our mark here, 128.75 to 132.97. Again, what you'd want to do, it's all about position sizing. We'll go ahead and pull that up on the screen here. We did one for the SPYs. We're going to do one here for the diamonds before we cut over to Basil. He is up next here. And then as we do on Tuesdays, we go up to Victor Jones from 12 to 1, Daryl Martin 1 to 2 out there. We're going to continue. We're going to use a 1.272 stop multiplication factor. That's just simply widening our average true range. In other words, we have the daily volatility. I never suggest that you get into a trade and have a really tight stop out there. You want to have a wider stop if you believe in the trade. You don't want to get knocked out just because of the daily noise out here. I'm using 1.272 is widening, is shortening up that stop. We said 128.75, and you may not want to take the trade just simply because the reward to risk is not in there. And so 132.97 here on the Dow Diamonds. That would give us just really a little bit over a 2 to 1 risk reward. That means for every $10,000 out here, and we're using a 0.5% trade on this. So on every $10,000, you're risking $50 out here, and your stop, it's all set. Your stop on this, hard stop would be 126.77. You're entering at 128.75. Your exit on this, 132.97. Says you would buy 25 shares per $10,000. You can use this to calculate your position size on anyone's trading system around here at TFNN. Whether it's Basil is coming up next, David White, Ken Shreve, Tom O'Brien, Steve Rhodes, or your own. Make sure, folks, that you understand the power of position sizing. Go to that homepage at TFNN.com. Go to the front page. You'll see on the left-hand side, you'll see the power of position sizing. That tool, my gift to you, 30 days, complimentary. The most important thing that you can do in trading, folks, is make sure you have the right position size. Everything is sized up here. We're going next to Basil Chapman. Thanks so much for joining me, folks. I look forward to seeing you tomorrow morning at 9 o'clock. Have a safe trading day out there. See you in the morning.